All right, welcome back to another episode of Profitless on Purpose, the nonprofit accounting podcast from not just one accountant. I'm one of your hosts, AJ Wheeler, but from two other very talented accountants, Mark Palardy.
Hey, everyone.
And Tammy Hess.
Hello.
As always, we have a great show for you this week. Our articles for the week is your nonprofit ready for foundation grants? Well, we'll tell you, listen up, and we'll let you know if you're ready to go after those big grants. Then we have, do fundraising professionals really sell? Is, fundraising in a nonprofit amalgamous to being a salesperson in a for-profit? Are there corollaries? Should everybody in your organization be a seller or a fundraiser? We'll talk about it and we'll find out. And then what lawmakers should do to make donor advised funds more accessible and appealing to the everyday investor. We'll talk about what donor advised funds are and our thoughts on how they should work in the nonprofit sector. So it's something new and exciting, I think, for some of our listeners. So stay tuned. We'll talk about it. And then this week's discussion topic are the do's and don'ts of finance tracking, what your organization and your nonprofit should be doing to track the ins and outs of money that you have and how to report that stuff, and our take on what really your organization should be doing to track that. Anyway, Mark, you have our first article this week. Why don't you take it away?
Yeah, this one is by Caitlin Cawthorn, and it's called, Is Your Nonprofit Ready for Foundation Grants? So basically, this article goes into the details as to what your organization needs to do if you are kind of at that place where you're ready to start receiving foundation grants. So the article posits that all grant funders can see which organizations are prepared, organized, and are ready to manage grant funding. And basically, they'll dismiss out of hand those that aren't producing a product that isn't ready for grant funding. So some of the pieces that are important for this article is to understand that this is going to take some time, it's going to take some will, and it's going to take some skill. So obviously, timing is they posit that it takes between 10 and 30 hours to get a grant funded or to do the work to get a grant proposal initiated. It could take longer. It just depends on the complexity. Do you have the bandwidth to do that? Do you have somebody who's experienced in that? So if you have to realize for grant funding, you're going to miss more opportunities than you're going to get. And a 20% success rate in grant funding is considered very good in the nonprofit sphere. So you're going to have a lot of rejections, and you can't just say, well, I applied for a grant and I didn't get it. You have to keep trying, keep getting better, and realize that grants will eventually fund, but it's kind of a matter of the odds, and it's a matter of learning from where you've been and moving forward. So the overall gist is approaching a grant funding process without a comprehensive strategy is a path to failure. And some of the best practices, I'm going to just name a couple here just so you understand. We've mentioned it before, but most grant funders are looking for somebody with 3 or more years of operating as a 501c3, right? They want to see a clearly defined mission, vision, and core values. I know. If you've listened to this podcast before, that's going to come as a huge shock to you, right? Because we mention this in every context, and it's important. So make sure you have that nailed down. They're going to want to see a strong board of directors, high quality programs, proven track record of success with measurable and shareable results. So what has your programs in the 3 years you've existed, what have they done? How can you measure that? And if you're just starting out and you're not at that 3-year point yet, think about what kind of measurable statistics you can create. How many people you've helped, how many organizations you've served, whatever the nature of that is. Be mindful of that if you eventually want to be going for grant funding, because you're going to be asked. And then why should your organization why should they get the funds as opposed to some other organization, right? What is it that makes you special? So just make sure you and everybody else who answers for your organization is prepared to answer why your organization deserves those funds. I think there's a lot of other pieces to this puzzle, but I'm curious if there are some other questions or other concerns as people enter into the world of grant funding that AJ and Tammy would like to explore.
Yeah, I think the article does a really good job, I think, of giving you this cursory view into grant writing. But I would say I want to push back against kind of the 3 more years I think this article is written from the perspective that you're going after large foundation grants for programs. And those, yeah, like I think this list really, really makes that apparent, and I think it's a good list if you're going after like those big foundation, private foundation grants that have a real track record of getting hundreds or thousands of applications for grants and then weeding through those to pick out, a winner. But I think the thing to realize if you're a small nonprofit starting out and you want to enter into this foray of writing for grants is this is not and you can go back and watch our episode on grant writing. Please do. And maybe Ethan could put an annotation in the corner or something to direct you over there. But I think, if you're looking if you have a really specific service offering, like for instance, if you're helping children or underprivileged kids, like in school, you can probably approach your county or state funding and grow a relationship with them, and they'll almost just throw money at you in some respect. I mean, now granted, you'll have to report on it and have all the underlying stuff to be able to do it. But if you're offering something like that, engage, if your service offering is close and near and dear to like a governmental agency or like a state or county agency, and they kind of talk about it. If you have a pet organization, find your local Petco or, your PetSmart or whatever, and ask them if they have some kind of way you can put a donation jar in there. But I think, these state and local agencies have lots of money that they need to spend and support programs. And often they don't have enough service providers to be able to do it. So I think that's a good place to start and look. But I think the checklist is pretty good. And I think having even if you're a small organization, having somebody just do it, like Mark said, on a regular basis, like some of the most successful organizations I've seen at grant writing, they submit 1 or 2 grants a month. And they just have this, treadmill or hamster wheel of just continuing to write these grants. And they get easier and easier over time because you're doing so many of them and you realize what they're asking for. And you get good at putting together those budgets to submit and the narratives and what they like and what they don't like and the whole process. So I think it's really important for you to understand the process of the grants and what the financial information you need to provide to get the grant and to keep the grant going. You'll learn more, I think, from a multi-year grant or a grant that's been approved over a time again and again as to like the ongoing upkeep of that grant than you would just, throwing darts at a board and trying to get one. So, but what do you think, Tammy?
I agree with all of those things. I think that it is a nice kind of tie back to our previous podcast episode, because at the end of the day, doing grant writing or applying for grants or, even doing the research to see what's available takes time and does take practice. So it's really good for people to really allocate the right amount of time and then, try because, the first one, as we said in a previous episode, is the hardest to get typically. And once you do that, you get an understanding of, how did I get that? How did we end up being successful in that particular application? And you can learn from that and then go forward for the next one. Or, it can go the opposite way. If you aren't getting grants and you kind of reflect back and say, I wonder why we didn't get those. And maybe even ask the original grantor or funder to say, I see that we didn't get accepted. Totally understand that, but can you give us some feedback? Because that's going to be really helpful as you go to the next one. So this is a big process. And I'm glad that the article provided some steps and some guidance on how to do that, because the more that people get familiar on the overall process itself, the more ready they are in terms of dedicating the right amount of time and resources.
Yeah, I think all very good points. I think the one thing that sticks in my mind though is HA saying that these governmental organizations are just going to throw money at you. I think that's an interesting image, and I can just see some of my nonprofit clients sitting there with their arms open saying, make it rain, make it rain. So, Tammy, I think you got another article for us.
I do. So mine's from Nonprofit Hub, titled, Do Fundraising Professionals Really Sell? The article starts off with a bold statement. Without fundraising professionals, it would be impossible for organizations to do their work, and donors would lack trusted partners in their philanthropic journey. It goes into what the work of a fundraising kind of looks like and how organizations can fundraise successfully. It did make an interesting connection between fundraising and selling. While not necessarily selling a product or service, fundraisers are selling an idea or a cause. Ultimately, they're connecting the donor's goals and values with a cause that they can support through donations or with their time. The article states that enthusiastic fundraisers that are knowledgeable and who truly believe in the cause that they are fundraising for are going to be more successful in fundraising. Thus, they suggest a cause-selling approach for fundraising, which is really focused on building the relationships with the donors, sharing what the organization does, how that it affects the fundraiser, but also how the donor can support the organization and how the donation makes a difference. The article provides steps to take when using the cause-selling method. There are 6 steps before even getting to the ask, which really, involves learning about the potential donor, connecting them to the cause, and understanding what you're asking for and how you should ask. And when I was reading that, it really does demonstrate the amount of time and effort it takes to develop a relationship and to really connect a person to the cause when asking for donations. The question I have for the group is, does this take a professional training or professional to really solicit or participate in fundraising? And is this kind of a method that most people within the organization or fundraisers are already kind of doing?
Yeah, I think this is kind of the trend in fundraising, and I really liked the way this article presented the cycle. And obviously, we welcome you to look at the bottom of our YouTube notes to check out the article. There are some nice infographics. And I think this new cycle way of thinking about fundraising is probably the wave of the future. And just comparing the old method of fundraising to the new way this is happening, where the old method was, hey, have you heard we need money? So give us some money. And the expectation is you'd get a letter once a year right before Christmas, right? And where they're asking you to give your annual donation, but you never hear anything more from them throughout the course of the year. There's no engagement. And a trending topic that we've talked about on this podcast over and over is engagement with donors. And to Tammy's question, absolutely, I think anybody at the organization can do this. You can have your volunteers, your board, everybody become proponents, to become acolytes who go out there and talk about how their funds have been used and what successes you've had with those monies. And as you start engaging more people and saying, look at this great organization, all the cool things we've done, you're going to inspire more giving. You're going to really cause the donor base to grow and to really get behind what you're doing, as opposed to just that generic letter that comes once a year that says, hey, we need your money or we won't be in business next year, or we won't be able to exist next year. So I love this trend. And I think it's totally doable.
Yeah. And to piggyback off what you said, Mark, I think you could almost take the same article and relate it to grants. I know we just got done talking about grants, but I think it's a very similar life cycle, probably with a few more paperworks and reports due. But I think what Mark really said resonated with me because you talk about a snowball effect, and we talk about word of mouth advertising. I mean, in the age of Google and the internet and reports, and we talked about last time about, the macro trends and fundraising and yada, yada. I think everybody, there's a Google search to find a lawyer, but when everybody needs a lawyer, who do they ask? They ask all their friends if they've had a good experience with somebody. And I think the same is true with a charitable organization. The word of mouth from your donors and your supporters and everybody else, everybody in the organization is essentially a fundraiser. If you think about it, even the people that are performing the services, if they're enthusiastic, if they know the program, if they know the mission, if they know all the things that make your organization great, it adds and bolsters to your fundraising. Now, a fundraising professional, somebody that is solely around raising fundraising, yeah, I think there's specialized training and all that, but these aren't it's not like we're asking you to understand restricted grants or something. This is a really easy concept, I think, for everybody in the organization to take. And I think it's something that everybody in the organization should know. All of the best organizations I've worked with, the champion of the organization, the executive director, is doing all these things, whether they know it or not. They're engaging with donors. They're letting them know the benefits of the organization and the programs that they're providing and who that affects. And I think it really hones in and makes the ask a lot easier if people are aware of what you're doing, and you're visible, open, and transparent. It makes a huge difference. So I would say, yeah, I can't recommend it enough for somebody watching to check out the link and check out this article, because I think it's really well written and has some really dynamite points on how this should be applicable to the whole organization, not just the fundraising crew. So
couldn't agree with you more, AJ. Thank you for that kind of call out to the articles. It is a good read. And I think you have our next article.
I do. So we're going to talk about donor advised funds, but I know that not everybody knows what a donor advised fund is. So just to give it a definition before we dive into the deep end on this one, is a donor advised fund is actually an investment account. And with the tax changes that happened, I don't know, 5-6 years ago now, the way people are donating changed from just, writing a check to your public broadcasting station or whatever. And it kind of has shifted more into these donor advised funds. And what that is like, you name the big investment firms, Fidelity, Vanguard, whatever it is, they have some kind of donor advised fund. And you put money in there that you usually right away get a tax benefit from. And then that money grows in this fund and you're able to direct it. Hopefully you're able to direct it into the charities that you would like it to go to. And so you're able to grow your investment and you're able to make your money. The real thought behind this is you're able to make your money grow and work more for the charities that you care about. And so the article that I have is essentially from Philanthropy Today, and it's an opinion piece, and it says lawmakers should make donor advised funds more appealing, not less. And what this dives into really is the fact that there has been some small tax incentives to make this more appealing, and then there was some legislation that came out around this, and essentially there was there's some proposed drastic changes to how donor advised funds must operate and distribute funds with the Accelerating Charitable Efforts Act. Anyway, what they're talking about is rules and giving taxpayers two options on how they bring their donor advised funds out, either a 15 and a 50-year donor advised fund, where at the end of your 15 year, the money that grow and then you distribute it, or a 50. And so the reaction to this, I guess, is that essentially the 15-year one isn't allowing the donor advised funds to grow enough. So essentially, it's a very long article and it's a very in-depth article, I think, that gets into the meat of what a donor advised fund is and how he thinks that money should grow and it should be, I guess, distributed to him. But I guess he's talking about a sensible payout rate for DAFs that initiates a certain number of years after opening the fund, especially in years when the market return is very high. But and kind of putting that into law. So I guess my point of bringing the article was, I was thinking, should donor advised funds have this timetable on them to distribute the money? Often we hear locally we have an investment firm that does mostly endowments, and they everything's behind a black box, and they dole out earnings from that on a quarterly basis for charities. But I'm wondering if donor advised funds, I'm thinking, and my thought is, I guess, and my take on this is that I think they should be more flexible. It's your investment and you should be able to direct those money and that earnings as you see fit. And I don't think that should be locked behind a 15-year or a 50-year, and you have kind of this A or B choice, column A, column B choice. But then you kind of, I would like to see it be more flexible. But I kind of like to get your guys' take on it and see, maybe I'm wrong here. Maybe that's not enough time to grow the investment.
Yeah, I think this is pretty technically accounting heavy for an article. We usually tend to not go this detailed and technical, but I think the author definitely brings up a good point about donor advised funds and how they are definitely skewed toward the wealthy, right? Because donor advised funds, as AJ kind of mentioned at the beginning, they're this vehicle where you essentially get a tax break up front, and then you get to dole those funds out over time. So this has been primarily used by people who are wealthy or super wealthy who use itemized tax deductions. And then you have your people who are taking standard deductions who, when the tax code raised the standard deduction for individuals up to $12,024 for joint filing, they were no longer filing itemized deductions. So they were not seeing the benefits of their charitable giving. So with some of the changes in the rules, if you're somebody who might take a itemized deduction, but you could find yourself giving every other year to a donor advised fund so that you surpass that threshold. You can start to democratize this process, right? So like, let's say I give $5,000 a year in charitable giving, but if I decide in year one, I'm going to give $10,000 and that throws me over the itemized tax deduction threshold, if I throw it in a DAF, I can still dole out that money, $5,000 a year, to the charity. The charity sees no difference, but I get a tax benefit in year one, and in tax year two, I get the standard deduction. So it ends up being better for the individual taxpayer. So this article kind of goes deep into the fact that these DAFs are really geared toward the wealthier people. And if you've got stuff that needs to be doled out of over 15 or 50 years, $10,000 over 50 years, it's not going to be a great deal of money, nor is it going to be something that the organization, the nonprofit organization, is going to say, ooh, I can earmark that and count on my $57 a year. That's fantastic, right? So I think, I agree with you, AJ, and I agree with the point of this article that making DAFs more mainstream is going to help the public at large. It's going to encourage charitable giving, right? Because there probably are some people out there who have scaled back for one reason or another, and who the Schedule A deduction was a real incentive. So, I like the idea that, these are relatively new, and I like the idea that the rules are still changing and that we're gearing more towards democratizing that.
Yeah, I don't have much to add on this. I think I agree with kind of what you guys are all saying. The thing, and I think we mentioned this before when we talked about DAFs, is that they are relatively new, and then they also take a bit of understanding. And so people who are using this as a method in terms of their charitable giving should really understand what they're doing and the time, and whether they're flexible or not flexible, all those things, really understand that before doing that, just so they're fully aware and they can expect what that giving actually means and the timelines for what they actually do and all that kind of stuff. But since they are relatively new, it is one of those things where it does take a little bit of research to understand them, because they are a little bit complex. And you're right, Mark, they're probably, geared towards those who can, that have a lot of money or a lot of money to give, and as a strategy. So, with any strategy, in order to use it and utilize it for the best, for your best approach, is to really understand it.
Yeah, really good points, guys. And I think the one thing that I wanted to hammer home with bringing this article in is if you're listening, and if you have a chance to input on this, I think making DAFs more accessible is going to help everybody, and making the rules about them transparent, because Tammy's right, it is such a complex kind of thing. You go from writing a check to you're broadcasting or your local charity for $50 a year or something like that, and trying to take it off on your taxes, to this really complex investment vehicle that has some hoops to jump through, and Mark's correct, it is set up for the ultra wealthy. It's really an investment vehicle and a donation for the ultra wealthy, but I'd like to see it be an investment vehicle in some way for individuals to be able to use. So I think simplifying the rules and simplifying the payouts and making it more kind of flexible, I think, is the way to go, but time will tell. So, but Tammy, do you have our discussion topic for the week?
I do. The topic's going to be focused on tracking donations and expenses. So the kind of do's and don'ts for that. And I'll start off with a really interesting do. Would be to understand, when you're obtaining a check or a donation from folks, really understanding it, what that donation is for. If it comes with some restrictions, if it's for, a particular use, or if it's for kind of like the general use and an unstringed type of donation, or if it allows or disallows for certain expenses. So really understanding when you're obtaining money from folks, what it is for. A check in hand is always great, but if there are things that are kind of that the donor intended it for it to be used for, you need to know that. So you might need to ask. So to kind of tie into that, my don't would be to don't make assumptions about the donor intent, so really get a clear understanding, or when you're calling them, say thank you, say, hey, got the check, thank you. I assume, that this is for XYZ, or, kind of making sure that you've clarified that donation. So what about you, Mark? What do you have to add?
Yeah, I think donor restrictions and tracking this is super important in any nonprofit organization. And you may be a small organization, you may be a large organization, but figuring out the way you're going to track this and being consistent and transparent and having a system in place that somebody coming after you or that you can grow from is super important. So if you're starting out, you might just use an Excel spreadsheet or Google Sheets to just determine I've got this much money that's earmarked for this program. So here are the expenses that are going against that money so that you know how much money that you have left, right? Because if you don't spend all that money, if that donor has restricted it in a certain way, you have to go back to them and ask them, can I convert this to my general funds account or would you like the money back? And 9 times out of 10, they're going to let you convert it. But you want to just be super clear and have a tracking system so that with each donor, the stand of where they stand and the tracking of the ins and the outs. So you might have QuickBooks in your organization and you might use classes for the different programs and then using a profit and loss by class to track your ins and outs. And then, of course, as you get larger, you might actually have some fund-specific accounting software that tracks all your different grants and your programs and all these things that are interconnected. That gets pricey, but for organizations of a certain size, it's invaluable, especially as you're bringing in a lot of revenue sources and you're tracking tons of different things. AJ, how about you?
Yeah, actually, I had some comments on what both of you guys said. So the fact of understanding if there's any donor restrictions, and like in tracking these donations and grant funds it's vital. And I think you can set yourself up by success. I used to work with a church that when they would take in donations, they would have on their donation card that, the gift you were giving was unrestricted. Because often, like when somebody writes in a check or something, they, like say they put on the memo line, feed the kids as one, thinking that directs them to a thing. But, and I think Tammy's suggestion of being super clear with them and contacting them to make sure that it's clear to everybody involved that, like this is an unrestricted donation. And then to Mark's point about, the tracking it in the accounting system and making, or, outside of the accounting system, the best organizations that I've seen in that tracking kind of thing use a combination of both usually, some kind of Excel spreadsheet and use the class system. But yeah, if you're really small, you can probably just track it on that Excel sheet. But the real successful ones I've seen use a combination and some tricks and tips around it, or, using the class system for grants, set up by grant, and then using your deferred revenue is essentially your temporary restricted parking spot for grants, and then being able to release it as it's satisfied. I mean, I think is really helpful and, helps like really make it easy to see when and where those are coming from. But for my dues, I guess like it rolls into what I was just talking about. You want to make sure that you're tracking these funds on a per program or per grant basis, or making sure that the funds that you've received are being tracked for the per program basis. So think of all the programs you serve and being able to bifurcate and have those tracked by each program is vital to be able to A, report on it, B, understand if you're losing money or you're in the red on any of your programs, and being able to report back for any kind of, if it is like a contract or a donation, to be able to track that grant donation or even just an individual donation, to track how it was used and be able to then report that to the donor or the grantor or the contractor. So, and then I guess right up there, don't forget to release your restricted funds. I know it's kind of silly, but like, whether you do that on a yearly basis, because you're under audit and you need to show them the release, or if you're doing it on a monthly basis for like being able to report to the board, often, nonprofit financials can be very wonky, I guess, for lack of a better word, because if you get a 3-year restricted grant that's donor restricted, or a 3-year donation to support a program, you have to report all that money up front, but as restricted, with donor restriction, and it's in a separate column. And so being able to show that like almost like on a cash basis or like a recognized basis, using that deferred revenue tracking is really handy, because your accountant, that does the audit can convert it to to your with donor restriction category, and you can show it to your donors and to your staff and to your board on a very, like, I guess, as it's used or as it's earned kind of basis. So yeah, don't forget to release your funds and to release those temporary restricted funds into your accounting system. What you got first, Tammy?
Yeah, the only thing I was going to add to this too would be to track thank you. So create a method of being able to track obviously the donations coming in, but if you send a thank you or a statement of donations or contributions to that donor, so that they know that you've received the money, and that you're thanking them for it. So I think that's always a nice add and a way to do that, because sometimes we forget to thank people for when they're supporting the cause that we're asking for. And then the other one is, really take a look at making sure you have the right documentation, especially for like reimbursable grants or matching grants for that, or matching donations for that example. Make sure you have all those documented, those tracked, and that you are following on those. Because if you don't, then you could find yourself in a little bit of trouble. Mark, do you have a couple more?
Yeah, I think you're going to want to also develop a allocation plan for specific things, especially if you have something, say rent or utilities that are used by multiple programs or are used by general administrative staff, plus also programs. You're going to need to have a clear sense of allocation and what methodology you've used to allocate any costs. It could be somebody's salary as well, somebody who works in administration, but also does specific work for a specific program. You might want to allocate those costs. Make sure you have backup for that. Make sure you have a rationale. If you're doing maybe a rent allocation, that you're using the square footage of the building or something reasonable. There are lots of different examples out there that you can Google, that you could ask us in a comment here as to how we would allocate a specific something or other. But, you're going to want to just have a clear methodology so that if anybody looked later and tried to figure out what you were doing there, it made sense. So the tracking, the revenue piece obviously comes in, but the expenditure piece is often what has some more scrutiny, because people don't want you spending money out of a specific program for general funds. And, I think as a corollary to that, I would also say you need to realize that you're going to need general funds as well. If you're doing your fundraising ask, don't just ask for specific programs. You can have programs that get their specific ask, but if all you ever do is ask for your programs and you never ask for money for a general fund and everything you get in is restricted, it's going to make it tricky to run the general stuff that doesn't involve that program. And believe me, there is always general stuff that isn't specifically program related. So a tip, if you're starting out, don't just make your asks super specific. AJ.
Yeah, I think the big thing here and the big takeaway from all this, and kind of just to wrap it up, is to make sure that I can't stress this enough, make sure you've documented all this stuff. I mean, document your allocation plan, document how you're tracking funds, document how you're releasing them, document everything. The don't would be don't not think about this stuff, because eventually you're going to be asked. And so whether it's by a savvy donor, by a grantor, by a fund, by somebody that has procured a contract with you for a fee for service arrangement. I mean, any of this stuff needs to be tracked. Make sure that document. I can't stress enough how much documentation matters. I know it's boring, and I know it's kind of like roll your eye at it. We got to write all this stuff down, but you have to document this stuff. So.
Well, to put a fine point on that, I'm going to document the end of this podcast. Thank you so much for joining us for another episode of Profitless on Purpose. We really appreciate you joining us to discuss nonprofit news topics, and we always appreciate your feedback. Tweet at us at ProfitlessPod, comment below in the YouTube video, and we look forward to seeing you next week for some more fun accounting topics from accountants' perspectives. See you next time.
Thanks, everybody.
Bye.